Hello there, this is James and you're watching Tixee Live, and a very good morning to all of you, and all of you a very happy Wednesday. In today's program, I want to talk a little bit about how the market is sort of really beginning to dread the beginning of 2023 and ask the question, is there real trouble ahead for the markets coming next year? Plus the fact that China has indeed, as we had anticipated, we're building up, does appear to be coming or changing its COVID restrictions, and why there is not much rejoicing at the moment in the market. But before I get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So it was only, hey to you too. A very good morning to you. I hope you're well and I hope you're having a great day. So like I said, I really want to ask the question, is there trouble ahead? When do we have to face the music and dance? Because yesterday we talked about PepsiCo letting a number of people off, making 100 people, redundant. But one of the major banks has now come out and have now announced it's cutting 1,600 jobs. This is Morgan Stanley. That is 2% of its global workforce. Now, they joined the likes of already some very famous big firms who have done a number of reductions in their workforce. The likes of Amazon, Facebook or Meta, Snap, Twitter, and PepsiCo have all made people redundant. I think I got a feeling it will, and this is what we're going to have an open conversation about. I think 2023 is going to be the year of recession. I think you're absolutely right, and this is what we're going to talk about today. But so like I say, we've already joined a number of firms already, but they're not the only ones, apparently. Goldman Sachs is another bank expected to make cuts. They haven't announced anything. They haven't put any numbers on paper, but they're also expected to make cuts. One thing they are going to do, which again is a frightening sign, obviously, of the times. One thing is certain is the end of year bonuses in the banking sector is expected to be cut by around 20%. Not I feel, a little bit, because their bonuses are pretty good, are pretty big. But, there is an expectation of them to start cutting in the bonuses they're going to get, which again is not a good sign. I mean, payouts last year hit a record in 2021 with the average bonus from Wall Street more than 250,000, so $250,000. So if it's 20% less, it's still pretty nice bonuses. I wouldn't say no, but still, that is not a good sign at all. And Goldman Sachs CEO David Solomon, he says economic growth is slowing. When I talk to clients, they sound extremely cautious. And the markets are acting in that way. We'll have a look at the markets in a little while, which is, markets currently are acting with cautious. And this is despite the fact that the China pivot is happening. What I mean by that is, but basically, they're easing their COVID restrictions. They're, easing their COVID curbs, which the markets talked about for several weeks. And there's several reasons why markets acting with caution at the moment. For one, we've been talking about it for weeks. months even that China might start doing reducing its restrictions. Obviously, we've been talking about it for weeks, so maybe it's a little bit priced into the market. But at the same time, and we'll have a look in particular, I want to look at oil in particular. At the same time, there is now real fear about what 2023 may bring. Anyway, China is ending its COVID restrictions, or curbing it, so to speak. They're ending the quarantine camps, because what they had, if you had COVID in China, you had to go to a specialized quarantine camp. You couldn't stay at home. You had to go to these camps, and you were forced to go to these camps. Those instead now, those with COVID can now isolate at home. There's no need to show tests now at most revenues, and you're free to travel inside the country pretty much. So this is, this is a lot bigger. And don't forget, they've been in lockdown for several years. This year in particular, they've been very, very strict because they've got zero COVID tolerance policy in China. So this is a sign that, they might be able to come out to play. So they might be able to be economically active again. Don't forget, it's the world's second biggest economy and the largest oil importer. Okay. But despite that, it fails to impress because realistically, recession is weighing heavy. And I want to look at oil in particular, because oil, like I just said there, China is oil's, world's biggest oil importer. But the fact that it can come out to play again is failing to spark the oil market. It's steady, but failing. We'll look at it in a second, because realistically, there is real fear that recession is going to hit in 2023. The UK is practically there. EU will follow, and the US will fall into recession. If big banks are cutting jobs or cutting on bonuses, and we said it on this program a couple of months ago, the number of banks were putting in large cash reserves to help them wade through the storm or the incoming storm. So there is that. And the question is 2023, and bear in mind, we've had a pretty ugly year as it is in 2022. Is 2023 going to be more uglier? I certainly think we're going to start the new year, or the first quarter is going to get ugly. I mean, Michael Wilson of Morgan Stanley, he believes that as well. A number of banks believe that. We were talking yesterday about another CEO who says, get ready for, the hurricane, he said several months ago. So it is looking pretty ugly. But I want to have a quick look at oil actually first, because like I say, this should really give a bit of a boost of oil. Bear in mind, we've got obviously the oil embargo is being put into place, not embargo, sorry, the price cap has been put into place now as well for oil, for the Russian oil. That fails to thing. OPEC has done its thing as well. Okay, it's done its thing as in cutting production, as they said they were going to do. But if we have a closer look at this, okay, this is it. This is basically where it started, the new year. And obviously with the Ukraine conflict as well, and supply issues, obviously oil was riding high. But then even now with China, recession concerns, it's practically wiped out all its gains currently at the moment of 2022. Where it started is basically back where it is now. So again, this is real concern that demand, despite China coming back out to play, the demand is beginning to really, really worry the market. And that 2023 is going to get ugly. There's something else I want to talk about before I get into that. There's something else I want to share with you, which I think is just as exciting. I'm a big fan of the Elliott wave theory as well, by the way.
Let's go.
Very big fan.
I traded the DAX in the morning, showed some really good signs of volatility as well.
Anyway,
join James and Stefanos every Wednesday at 1800 UTC for another lesson at Tixee Trading School, your key to a better understanding of the financial markets.
There we go. Indeed, tonight, in fact, is the next episode of The Trading School. Tixee Live presents The Trading School. It's going to be on at 6 p.m. UTC. I forgot to change the banner then. So tonight at 6 p.m. UTC. Today's topic, which, again, I'm talking a lot about at the moment, in many ways, in some ways, is market sentiment. market sentiment, because I think market sentiment is something really important to engage. A lot of people look at obviously technical analysis, they look at fundamental analysis, they don't look at market sentiment. So I'll be, me and my colleague, obviously Stefanos, we're going to have an open conversation in reference to the importance of market sentiment and how to understand it. What resources are out there for you to engage, understand market sentiment, such as the Commitment of Traders report, looking at the VIX, for example. What is the VIX? Explaining things like this and many other things. So please come along and join us for that. Remember, though these are live broadcasts, because at the end of the day, live does mean live, it's tixee Live. These won't be on YouTube for another couple of weeks. To come and watch it live and ask us questions live on air, which I love when people ask us questions on the trading school, you have to click on the link in the description below, register, and come along and join us tonight at 6 p.m. UTC. I hope to see you there. Right, moving on. Now, don't forget, the market had got itself into a bit of a bullish momentum near the end of November because of what Powell's speech said. And it gave it a bit of a bounce. But it does really generally appear to be losing momentum in the stock market. And there's an interesting heat map I want to share with you, which is, it's a bit different. Usually, let's look at charts. I'm going to share this with you as well as looking at the charts. It's beginning to lose its bounce. And which I'm not surprised, because at the time I was a bit surprised by the bounce, because all that Powell said in that speech was, yes, we're likely to do smaller rate increases, maybe starting December, and we all pretty much know next week, the 14th, they're probably going to do 50 basic points. We knew that. But he said something which the market suddenly woke up to and started to hear, that the interest rates may go above their initial target of 4.75 to 5, something even higher, and they're going to have to keep it there for a considerable amount of time. And now the market's finally paying attention to that. And it's also hasn't helped because obviously we've had some very good job data last week, NFP 263 versus 200,000 expected, obviously. And as well as that, we had a very good ISM services PMI as well. So, it's losing a bit of its bounce. And there's a couple of stocks which are looking really, really interesting. For example, Apple is breaking below a key level. We're going to pull that up and have a look at that in a minute. On falling demand for its flagship phone, the iPhone 14, the demand is not as much as they thought. Plus, there's supply concerns like chips and things like this. Obviously, they've had a lot of problems in their Shanghai plant with the COVID issues, and of course with protests at their major plant there. They are now looking to try and develop chips in the US instead of relying on China. But still, there is a key issue with Apple there. And both Amazon and Tesla now are moving again towards bear market lows. So it's not looking particularly great. Now, let's have a quick look, actually. First of all, let's have a look at Apple while we're saying it's approaching a key potential level. As you can see, it's trading, or closed yesterday, $142.55. And it's approaching that key sort of area of interest for me, which is Fibonacci ratio of 23.6. So that's quite interesting to watch. And like I say, the market in general is beginning to go red. Now, I want to show you something. See if hopefully you guys can see this okay. This is obviously the heat map of the S&P 500 with all the major stocks on that. And this is where they closed yesterday, because obviously it's on a daily. So you can see Apple yesterday closed. You can't because my picture is in the way, but let me see if I can move it here so you see. There you can see it a bit better. Apple closed obviously negative 2.54% yesterday, and Microsoft negative 2.3%, and Google negative 2.51%. So there's a lot of red on this heat map, a lot of red. Like I say, both Tesla and Amazon are approaching, bear market lows. And like I say, they've had a tough year. If we look at year to date in general, there's a bit of green in the health sector, a little bit of green in the finance with Berkshire Hathaway. Obviously, we knew this already. This was pretty impressive. Of course, I will look at gold. It's me. I'm a gold bug. Of course, I'm going to look at gold. So there's a little bit of green in the finance sector this year, but all the majors, JP Morgan has been red, Bank of America. Like I say, you can see Morgan Stanley so far this year has not been good. The health sector has done all right so far this year. Energy minerals, surprisingly, the oil, with oil pricing at where it was, record highs, that's always all been in the green this year. But Tesla, like I say, negative 53% down this year. And so Meta, the tech sector in particular, is getting crushed at the moment. So like I said, I did those predictions yesterday from Standard Charter. They are saying the tech sector potentially could get even worse sometime next year. But anyway, just wanted to show you this heat map on the moment. And if we have a quick look, actually, as we look at it, let's have a quick look at the S&P FTSE 100 on the European session, how that is looking at the moment, year to date. But let's have a look at on the day at the moment. Energy companies, negative today. We already looked at oil prices. That's come down today, so that's surprisingly. The banking sector as well, look. The banking sector is negative on the day. Health sector is performing pretty well. Commercial services doing okay. But it's the banking and the energy. If we look at it for year to date on the FTSE as well, again, a bit of green in the banking, but a lot of red. Obviously, the energy market has done quite well. So that's interesting to see. So like I say, 2023, it could get potentially uglier. Anyway, let's have a look at some other bits and pieces. Let's pull my chart back to normal. Just wanted to share that with you, just for a bit different. I like looking at the heat map. Let's start off with the single currency, okay? It's had 2 days of losses against the dollar, so we have seen a little bit of dollar fight back, a bit of dollar strength. Still trading, though. Still trading way above. Still trading below the 105 handle, which we've managed to break, but still trading above the 200-day moving average, means there is a little way for it to go for it to become overall bearish. Key level for that is 1.03882. British pound dollar, again, that's trading just above the 200-day moving average. So the interesting thing about the sterling as well, UK house prices fell today to the lowest level since 2008. So that's also a negative sign for the potential future of the great British pound. So that's worth keeping an eye out for. And for let's look at the dollar yen as well. For 3 days of growth, so 3 days of dollar strength. It tested that 200-day moving average, is now fought back. Testing now a key area for me, 30.20 on the Fibonacci. So key area there for me at the moment is around about just about 138.10 is the key area I'm keeping an eye on. And of course, by popular demand, which I'm always going to look at, is gold. Obviously, because I'm a gold bug. Again, above the 200-day moving average. Like I said yesterday, I'm going to keep an eye on this because as more recession talks start to come in, whether or not gold might start getting its safe haven status back, that would be interesting to see if it can start getting its safe haven status back. Above a key resistance level, support level, which is the 200-day moving average, $1,759.59. It really can't break that $1,803. So it tried twice and it couldn't break it. But that's the area, as you can see, I have been watching for quite a while. So it needs to get above that. If we can get above that, then potentially the next area of interest for me would indeed be 1,877. But anyway, it's all dependent. It's all dependent, realistically, on what obviously the Fed starts doing with interest rates, because gold's been punished by the Fed interest rates decisions, the aggressive Fed and bond yields, but plus, more importantly, whether gold will start getting its safe haven status back. But I'll start looking at that a lot more closely soon. Other major events happening today and this week. Obviously, we had EU GDP, actually, which came out, I think, actually, I'm a bit behind, came out a little while ago. And we got Bank of Canada interest rate decision later today. Consensus that they'll do 50 basis point rate hike. Don't forget, they've been aggressive. They're ones who've done 100. So it'll be interesting to see what they do. And will that be like a foreshadowing to what the Fed might do next week? And of course, Michigan consumer sentiment. The equities in the European session as they currently stand. FTSE currently in the red, negative 0.21. DAX currently trading in the red, negative 42. Euro Stock 50 currently trading negative 0.28%. Don't forget, you can ask me questions anytime you wish, or share me your opinion, or simply say hello if you like. Not a problem. Not a problem. Don't forget, if you think of a question later, you can put it in the comment section either on YouTube or Facebook. I will see them and I will reply to them next time I go live on air, which of course would be tonight for the Trading School. Don't forget, if you want to come and watch Trading School in talking about market sentiment, click on the link in the description below and hopefully we'll see you tonight. So don't forget that. Okie doke. If there is no questions, not a problem. Not a problem. Don't forget, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you enjoyed this video, find it interesting, useful, and interesting, and you basically put up with me, I'm over a top enthusiasm for the markets, I simply cannot help, then give me one of these. It's nice to know that you like what I do. Anywho, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.